Today, we're speaking with veteran broker Bob Knakal about the sensitive topic of retrading. The controversial negotiating tool is being used more now, insiders say, as buyers are hit with sharply rising interest rates, cutting into their purchasing power. Bob has a long view on this topic. He has been in the business since 1984. Along with Paul Massey, he launched Massey Knakal Realty Services in 1988, which they sold to Cushman & Wakefield in 2014. After a stint at Cushman, Bob joined JLL, where he is today chairman of New York Investment Sales and co-leads the firm's investment sales division. Bob has brokered thousands of deals totaling many billions of dollars, and that experience makes him well qualified to speak on today's topic. I'm Adam Pincus, founder of Pincus Co Media. This episode is sponsored by G-Parency, a provider of technology solutions designed to empower commercial property owners and reduce the reliance on certain high-cost service providers. This is our 12th broadcast. Prior episodes are on our YouTube channel and via podcast. So, Bob, welcome. Thanks for coming. And I'd like to ask you to define the concept of retrading.
Yeah, Adam, it's great to be with you today. Hello, everybody out there. Retrading, what a great topic to talk about. It's probably the thing that brokers like the least and sellers like the least. Interestingly, it's some folks do it because they really need to, because of some unforeseen event, and I think some do it just for sport because they can't help themselves. But retrading is when you make an offer on certain terms, certain price, and then come back and change your mind. And again, sometimes that change could be for valid reasons. Sometimes it's for not valid reasons. And it's really what, trying to differentiate whether the retrade or the change in position has validity or not is something that we spend a lot of time trying to figure out.
Is it possible to kind of give a history or sort of your personal history with retrading, like the first time, if it's changed as a tool over the years?
Yeah, well, I think you see things, you see more retrading occur when market conditions tend to change for the worse. Rarely have I'm trying to think if I recall ever a time when market conditions were getting better and the seller retraded by increasing the price they wanted. I can think of one time when that happened, that I no longer deal with that principle. There are two principles who, over the 38 years I've been brokering, I will never work with again. And one of them raised the price several times in the course of a few weeks of negotiating because conditions were getting better. That's also a no-no. But most of the time, retrading occurs when market conditions are deteriorating, interest rates may be increasing as they are now, debt becomes more expensive. But most of the time it's because something has happened in the economy. There's either a stock market crash, as happened in 1987, which was a one day, one moment thing that changed everything. Or it could be something that plays out slowly over a period of time. But clearly, in times when we've had downturns in the market, recessionary periods, or some type of externality that impacts the market, that's when you tend to see people changing their minds a little bit more.
Not to go back too much into this, but the concept of a seller retrading, just to kind of go over that, it's extremely rare. That doesn't happen that much. Like, wouldn't a seller do that just as often, theoretically? Just
no, that's not been my experience. It's most of the time it happens on the buy side. I've not seen sellers change their mind all that often. It happens occasionally, but that could also be because because circumstances have changed.
Mhm.
In the midst of a negotiation, for instance, in a building that has rent regulated tenants, in the midst of a negotiation, if a key rent regulated tenant happens to pass away or move out, that could change things. Often sellers though will stick to their word, and I think within the brokerage community, people may not overtly talk about it, but you like to work with people who stick to their word. There are some people on the seller's side that they will agree to a price and terms and be negotiating a contract, and a higher bid comes in, and those people won't talk to the bidder who bid more. And there are other people who for a relatively modest amount will go with the higher bid,
Mhm.
although it tends to be that there's a direct relationship between the likelihood of the seller retrading and the spread between the existing bid and the new bid.
Right.
With the bigger that gap is, the less likely someone is to stick with their old bid. But there are people who stick with their word, and that's something that is admired. We're working on several transactions now where the initial bid came in maybe 6 or 8 weeks ago, and those buyers are staying at their price that they're at, that they came in at a couple of months ago. Those are great people that we want to continue to do business with, because they're sticking to what they had offered. And clearly it's costing more as interest rates go up. The cost of their debt is going to be more expensive. The metrics of the transaction change.
Mhm.
um, but I think when someone makes a bid for a period of time, unless it's something really a major adverse condition occurs, we like to see folks stick to what they initially said.
Do you have any way to have numbers to talk about now or the past 2 or 3 months versus like 1 year ago? How many examples of types of retrading that you're kind of hearing in the market or you're actually seeing yourself?
Yeah, Adam, I don't have statistics on it. I can tell you that, one of the things that we look at are defaults on non-refundable
Mhm.
deposits. Those tend to be at or near zero most of the time when market conditions are good. And then when they get a little more challenging, you see those defaults increasing. Not to say that during good times there's not a default, and during bad times a lot of people fulfill their obligations under contracts. But it really is dependent on market conditions, what the expectations are of being able to get debt, being able to raise equity, and a lot of times if the investor is an operator, and they're reliant on their equity, they have to do what the equity instructs them to do. So a lot of times that decision may be out of the operator's hand,
Mhm.
but there are so many people involved and so many pieces have to fall in place for a transaction to occur. It can get derailed relatively easily. It's actually shocking that more transactions don't get derailed,
Right.
particularly when times are challenging.
So just what you mentioned, where there are people defaulting on their the hard contract deposit. Do you have some either anecdotal numbers on that? Like you've heard of two or three or 10, or like how do you quantify that right now?
No, well, again, I don't want to mention any specifics
Hmm.
for a variety of reasons, but we've seen some defaults on hard contracts. I think that if you look at what's happening with the interest rate environment currently, I think that it appears interest rates are impacting the office building sales market more than the other sectors, and that is also for a variety of reasons.
Can you
Um,
give just one reason? Because they have institutions. Wait, what are some reasons? Just to,
Well, the just the nature of that market today, given what's happening with the work from home concept, already lenders are a little bit unclear about what the conditions are going to be like moving forward. So the opaqueness in that market is one of the things that has a lot of folks crossing T's and dotting I's and making sure everything is lined up. But it seems like the risk associated with those types of investments has the rise in interest rates impacting office apparently a little more than other sectors. And primarily my business is in the land and multifamily sectors, and those two sectors have been performing very well. I think the interest rate environment currently is having less of an impact on those sectors, and the reasons why, I believe that land is very indicative of what developers believe the market conditions are going to be like 3 or 4 years from today. Even if rates go up, more than expected in the short term, I don't think a lot of folks believe that rates are going to stay elevated for 3 years. So people are expecting a more normalized environment when the stuff that they would be building today will actually come online. With regard to multifamily, that sector of the market has already been dealt a very significant stomach punch in June of 2019 when the rent regulations changed. And so that market has been recovering quite nicely, especially with the positive absorption in the apartment market, both of rentals and condos, the upward pressure we've seen on rents. I think that most people who are operating in the multifamily sector today believe that the political headwinds have stopped going against the market, particularly with good cause eviction not making it out of the last legislative session, which just ended a couple of weeks ago.
Well, here, Bob, wait, if we can, I want to get it back into the retrading side, because I am hearing from multifamily brokers and owners that some of them have a very dark view of what's going to happen. I have brokers, some of them are looking forward to that, but but putting that aside, with the retrading, do you think that there are, well, I guess one question is, what happens to somebody who becomes known as a frequent retrader? Like, how do you prepare yourself?
Adam, reputation means a lot. Right. I mean, a lot of, if you think about what the business is, it's not like a key going into a lock and it either opens or it doesn't. So much of it is who's got a good reputation, who fulfills their promises, who does what they say versus what they don't do what they say they'll do. And oftentimes when a property is being sold, and you get down to the last stages of a marketing process, there are likely 3 or 4 bidders that are all right there at the hoop, ready to go, within a very, very minimal difference in their bids. And so you want to go with someone that you have a great degree of confidence in. If you think about it, the time between agreeing to send out a contract and signing that contract could be done in the old days. We used to just go over to the seller's attorney's office with the buyer and their attorney, and they'd sit there and in a day or two hammer the thing out. And I miss those days significantly because that was great. Today it can take 3, 4, 8 weeks to get a contract done, which really shouldn't take that long, but it does. A lot can happen in that period of time. So if you have, let's say you have 4 bidders that are all at $50 million for a particular property, and you decide to go with one, and it takes you 6 weeks or 8 weeks to negotiate a contract, by the time, if that buyer retrades and the seller decides not to go forward with them, by the time you go back to the other 3 bidders that were all at that same price, they've either purchased something else, they're no longer interested, or they smell blood in the water, and they're going to lower their offer. So it's a dangerous thing to pick a horse that is not going to actually sign the contract, and reputation has a lot to do with that. So
have you had to make that call? Like, that's an interesting situation where you had one one person retraded, the seller's like, forget it, and then you have to go back to the other potential bidders or buyers. Have you had to do that?
Yeah, that happens. We try not to have it happen that often, but it absolutely does happen. Circumstances change. And when you have to go back to the market, you are at a disadvantage
Right.
from the seller's perspective. That's why often sellers will send out multiple contracts. So if the primary buyer does not sign the contract, you're not going back to square one. You can immediately go to a second buyer. And that's one of the reasons also why buyers don't like having multiple contracts sent out, because they have less leverage to retrade. They're afraid if they try to retrade that the seller will go with the other contract because it's right there. That's why I really feel badly for my brokerage colleagues that work outside New York, because in most jurisdictions, you get due diligence periods. And from my perspective, a post-contract execution due diligence period is just an invitation to retrade. And by the time that due diligence period is up, the other buyers have probably moved on. It's one of the things those of us that operate in New York are very fortunate that in the overwhelming majority of times, due diligence is done simultaneously with negotiating the contract. And that really keeps the buyer honest. It's in the seller's best interest, and particularly, for properties that have a highly competitive bidding process, you can send out multiple contracts and have different buyers doing due diligence at the same time. We had a property that we sold a couple of months ago where we had 5 contracts out, 5 buyers doing due diligence at the same time. And the seller was in a great position to ultimately select the buyer and the contract terms and conditions that they felt most comfortable with.
So with the idea of the retrade, how do you manage if you know that the buyer who's coming in is known as someone who's retraded, either from your experience or not, or someone tells you? How do you manage that buyer?
Well, absolutely. You tell the client, and I always represent the seller. I mean, in all of my transactions, I've always represented the seller. I let the seller know immediately, hey, this buyer has a horrible reputation. They retraded on these 2 other deals that we had them in front of. And as long as you fully disclose what you know, I mean, you don't want to disparage anybody. You just give as many facts as you can about what you know about a particular buyer. And if you're not that familiar with the buyer, ask around. We constantly, based on all the new folks who have come into the market over the last few years, we're constantly sending emails both internally within JLL and to friends in the brokerage business. Hey, have you ever heard of this buyer? Do you know what their reputation is? Did you ever have an experience, good or bad, with them relative to doing a transaction? And we'll even ask buyers for references of sellers if we don't know who they are, to try to get insight into this.
Is there any kind of broad breakdown, like buyers from is there some place where it's like so completely unheard of that some group like never does it, or some group does it like all the time?
No, like my mom always used to tell me when I was a kid, nothing is always or never. So you can never rely on any particular thing. There are some folks who have sterling reputations, always standing behind their word. There are other people not so much. But I think from a brokerage perspective, as long as you are informing the client about the reputation of the buyer, and I tell you, I go back many years, there was a developer in town that had a reputation as being very, very litigious, litigated over a couple of deals that we were involved in back at Oldco, and they wanted to buy a piece that was in the middle of an assemblage they were putting together, and so clearly they were paying a premium. And I told the seller, I said, look, I just want to let you know this developer has an absolutely horrible reputation. He's going to sue you for something, whether it's a real thing or a made up thing. He's going to sue you. It's going to be horrible. If you want to make a deal with this guy, you should get an extra $400,000 or $500,000 in price to cover your legal fees that you will ultimately have to pay.
Mhm.
And sure enough, we got him up on the price. He signed a contract, and within a couple of months, he started to sue the seller. And the seller said to me, Bob, thank you so much for telling me what to expect. I fully expected this. And, and at the end of the day, that worked out, and the extra price helped pay the legal fees that the seller incurred. But it was just a stalling tactic. I think that buyer wanted to buy the property, needed to buy the property, just didn't want to close until the last possible moment, and litigating is a way to do that. So I think a lot of it is to just set the expectation of your seller. But reputation is everything in this business. If you talk to, you look at how principals have dealt with their banks over time, and when things get tough and they're defaulted on their mortgage, do they cooperate with the bank? Do they work with the bank? Do they give the keys back, or do they do all kinds of legal maneuvering to try to hold on to the last second, go into bankruptcy, et cetera, et cetera? Banks remember that stuff. And I've seen people yin yang the banks around for a long time, and I've seen people do the right thing. And those people who do the right thing, the banks will continue to make loans to those folks. So I think in real estate, because it's not an absolute, that your reputation means a lot.
What I know this is like very hard to do. I'm just trying to, if there's some way to think about over your career, like how many retrades you've dealt with in a personal way, that would give like some concept. Is there some, like 20 times, 50 times, 100 times, too many to count, or
Well,
just
I probably too many to count, Adam. As of last week, I'm at 2,182 sales. So I would say probably at least 20% of those probably had some type of retrade with someone along the way. So that's 400. And then you have to think about the deals that were retraded that didn't happen,
Right.
which will add to that. So it's literally hundreds and hundreds of times, but that just, it comes with the territory. You have to expect it. And you also, there are times when buyers will say, and it's great that they do this, to say, Bob, look, I want to go ahead, send me a contract. My only concern is, I heard that XYZ tenant, has this kind of issue in their lease. If that's the case, that could be a problem, but I need to look into that. And as long as they identify the issue, then if something comes up, at least you're forewarned about that. Clearly, there are all types of reasons that people use to retrade. Sometimes, it's always challenging around the time where real estate tax assessments come out, because you're negotiating a deal and the real estate taxes go up by 15%, and all of a sudden that's a reason to retrade. But I think, to the extent, if someone wants to retrade, either they have buyer's remorse or seller's remorse, there is always something you can point to try to make that retrade look legitimate. Whether it is or not is another story, but there are a million different things you could point to say, this is the reason why I can't do X, Y, and Z that I said I was going to do. And, unfortunately, that's part of the business. You have to have a thick skin.
Are there times where it's in a sense legitimate, where you're like, oh, you then talk to the seller and you're like, you know what, we didn't know about this, or yes, interest rates have gone up and we're not going to get this number, so is it okay to go down?
Well, I think it depends what the issue is. Yes, are there legitimate reasons? Yes, there are. And it could be that there is some type of a title issue. It could be that an easement is discovered. It could be any number of things. And, there are some folks who, to their credit, will say, hey, I was not aware of the sidewalk violation. It's going to cost, $40,000 to put a new sidewalk in.
Mhm.
And some people will say, you know, I want 40,000 off the price. Some people will say, I'll split it with you. And some people will say, look, I wasn't aware of that, but I really want the deal. I'll eat the 40,000. And, you know, you remember those things. You remember how people behave during negotiations, and it absolutely impacts the next deal.
So like right now, when if someone like went into contract and interest rates go up and the property's in some cases like by all measures worth less, is it oh is it okay to say like, okay, let's drop the price by 2% or 3% or 5% or something? Or is it just like, look, you signed a contract, this is we all need to be, you know, big
Yeah,
people
look,
here.
again, there are a number of different
Mhm,
circumstances, and you really don't want to make a blanket statement about
mhm,
what's good or bad or ugly or whatever. I think that, you know, the buyer or the seller doesn't have an opportunity after the contract is signed to say, hey, the price went up.
right.
You know, things got a lot better. I want more price. The buyer's going to say, well, too bad. In the same way, um, you know, I think once a contract is signed, you know, if the buyer changes their mind, that's why you have a big deposit. And
Mhm,
in times like this, when, you know, things are a little bit more uncertain, there are several transactions where we're asking for 15 or 20% as a contract deposit to try to
uh-huh,
dissuade people from retrading. And so that's one of
mhm,
the best ways to have people stick to their guns. Anytime a buyer suggests a very low contract deposit, then it's nothing more than an option. And that is always a red flag when, you know, somebody's doing a $100 million deal and they want to put up $1 million on the contract. That's like a nothing burger.
right.
And it's always a red flag.
And are there any other elements to the times we're in right now that you think are relevant to retrading, other than interest rates and sort of uncertainty
No,
on
well, interest rates
pricing?
are one thing. You have taxes that are another. You have so many things that are happening now from a macroeconomic perspective. You have policy. I'll say that in all the years I've been brokering, I've never seen a more highly correlated commercial real estate market to political positions and political policy. um, and that's really having a profound impact on the way our markets are operating, particularly here in New York. So, you know, I think there are a number of things that can happen. And again, there's no one size fits all answer to your question about whether, you know, is it always bad or is it always good? I will say there are legitimate reasons and there are illegitimate reasons, but notwithstanding whether the reason is valid or not,
Mhm.
it is an impactful thing on the reputation of that principle, and something that, you know, particularly brokers don't forget.
All right. Well, on that, thank you. I appreciate you taking your time and kind of giving a history of retrading and how people are thinking about that. So thank you. And this will be on YouTube either tomorrow or the next day, and so you can look for that. And have a great evening or good
Thanks,
afternoon.
Adam.
Okay,
Great to be
thanks.
with you. Take care, everybody.